When we created Switzer Asset Management, our objective was to help clients grow and protect their wealth. At Switzer, we believe most investors aren't looking to shoot the lights out, but are simply after an investment solution that delivers consistent, competitive and reliable returns. With dividend incomes challenged from COVID-19 and a slowing economy, we've found many investors are after a middle ground between low-yielding term deposits and the volatility of shares. And with Australian investors notoriously underweight fixed interest, Switzer Asset Management has decided to partner with one of the smartest people in the industry, Chris Joy, to relaunch the Switzer Higher Yield Fund as a listed vehicle. The fund has been designed to deliver attractive yield with much lower risk than equities by investing in a portfolio of fixed income assets. Chris is one of Australia's leading fund managers and has had an impressive career as an economist and government advisor. He's also a regular contributor to the AFR and a well-known media commentator. Welcome, Chris.
Thanks for having me, Peter.
Firstly, we're delighted to be partnering with you and the team at Coolabah Capital. Now, the fund aims to deliver a return of 1.5 to 3% over the RBA cash rate while delivering minimal capital volatility. Can you tell us about how the fund aims to achieve this?
Yeah, so we'll hold a diversified portfolio of bank bonds and corporate bonds and government bonds that will basically give us a weighted average interest rate that will be about 1.5% above the cash rate. But then through active management, through buying and selling bonds, we'll be looking for cheap securities that are actually going to appreciate in price and which will give us capital gains as their interest rates normalise back to our target.
What are some of the features of the fund, Chris?
You can buy and sell into and out of the fund through your broker. And you can also invest directly through the unlisted channel. The fund will have quarterly income distributions and it'll have an average credit rating in the A band. What that means is it'll have a similar credit rating to a bank like Macquarie Bank.
Now, many people watching this would be aware of the risks of the stock market. Why are fixed income investments traditionally less risky than equities, and what role should they play in someone's portfolio?
Yeah, so if we look at March 2020, a fund like this would have been likely on a mark-to-market basis, down about 1.5%. The equity market in March lost about 20 to 30%. So this fund has low volatility of around 1 to 2% per annum. The share market volatility, and that measures how much the returns move around, and it also gives you a sense of the risk of loss, is about 10 times more. It would be situated in a portfolio in the defensive sector.
Coolabah is the investment manager of the fund, so can you explain what makes your investment process unique and tell us about some of the investments in the fund's portfolio?
Yeah, so Coolabah probably has the biggest team in Aussie investment grade fixed income. We have 25 execs, 13 analysts, 5 portfolio managers, spread between Sydney, Melbourne and London. Coolabah is also the most active participant in the Aussie bond market. So we don't try and generate return through chasing risk, which is what most people in bonds do. And they'll chase risk through investing in bonds that have no liquidity or bonds that have a high risk of going into default or bonds that have very long terms. At Coolabah, we're focusing on liquid bonds that have negligible to no default risk, that are floating rate and which don't have any interest rate risk.
This fund has been designed to meet the needs of retail investors and self-managed super funds. There are 2 ways to invest in the fund, just as you would any ordinary shares. The ticker code is SHYF. If you don't have a broker or would rather invest directly, you can complete an application form available at switzerassetmanagement.com.au. As a reminder, you should always read the PDS carefully before investing.